Good morning, everyone, and welcome to the European crossover webinar. And we are starting to see the bunds come off. They've actually come off a decent amount. We're going to move into those quickly. I'm maybe trying to put another short back on if we can get a little bit of a rally back. Bear with me. You can see here where there. I don't want to jump in right now. Let's see if we can get a rally back up closer to 80. Um, but you can see here that we've gone and paired back. So if you look here, these touches right here, that's 85. It's 84.8. So as long as we don't get a 30-minute close above 85, this looks like it's setting up for short. And the reason that's important is, as I mentioned yesterday, we talked about the euro. And you can see right now the euro is a bit on the bid here. So we're starting to, and we talked about that. Once we can get a slide back in the bund, that would open the door for the euro to go high. Actually, the euro is even pushing even higher right now as that bund is slipping. And I said, watch out if that bund corrects back, you can see this euro really take off. And it's already trying to push up a little bit higher. I'm trying to see if I can get the euro to pair back to maybe, you can see already now it's on its highs now at 52. See if we can get it to pair back around this 44-ish area. Maybe we'll get a pullback here in the bunds that may allow us to dip back around 44. So that's what we're seeing here on that. Go. Dollar yen, it's not really anything I like about the dollar yen. I mean, like I said, I was hoping it would zoom up, to this 107 area. It didn't. I really don't want to do anything with the dollar yen at this point. I just, like I said, we did turn lower. Now we kind of pushed it. I guess we kind of held in this area right here. You can see, almost 560. We didn't quite make it there. Out there, 562. The low was what 66, but we bounced up rather quickly. Then we kind of slid back down. Nothing I like about that currency at this point. See here, the euro is still trying to push up a little bit higher. We'll see what happens with the bunds. Dollar index here, just hanging around this area here. Remember yesterday our bonds chart resistance was 94, or actually 97, 93. I was going to put 94, but anyway, 93. With that, we'll move into the news. Actually, before we do that, we'll go in and take a look at with the data for today. As I said, this time is all goofed up. I have to get my clock to be set up correctly. I don't know why it's reflecting those times. So at the bottom of the hour, we do have UK retail sales. We do have at 8:30 Eastern is going to be New York Fed manufacturing and, of course, the regular jobless claims. And we have Philly Fed business index at 8:30 Eastern with Philly Fed employment. Also retail sales, 8:30 Eastern. Capacity utilization, which will be at 9:15, and industrial production, those appear together always. And business inventories at would be 11 a.m. Eastern. Okay, British opposition leader Jeremy Corbyn has urged lawmakers across the spectrum, including rebels in the ruling Conservative Party, to help block a no-deal Brexit by bringing down Boris Johnson and installing him as the leader of the caretaker government. Given that a majority in Parliament opposes no deal, the plan should have potential. It has already been welcomed by parties in Scotland and Wales. The problem is that others in the Assembly are deeply skeptical of Corbyn's motives, given that he is essentially anti-European Union and that his views are too far to the left for many lawmakers to stomach. Jo Swinson, head of the pro-EU Liberal Democrats, swiftly rejected his proposal for a caretaker government. She sets out her own plan today. Move on. After news on Tuesday that Germany's economy shrank in the second quarter, the Dutch National Forecasting Agency, CPB, said this morning economic growth will slow more than previously expected next year. The U.S. yield curve inversion lit up investors' alarms like a Christmas tree. President Trump's attempts to fine-tune the stock market via tweet and nuance has been scuppered by bond markets who are a bit tired of escalating trade war and rush to price in a 2020 recession as Washington and Beijing continue to slug it out. The drop of a 10-year yield below the 2-year rate on Wednesday for the first time since before the Great Recession, which is seen by many as the most reliable of U.S. recession warning in financial markets, indicate as it does deteriorating economic activity over the maturity spectrum and also by hampering bank lending by hitting interest margins. The 2 to 10-year inversion sets off warning lights for investors elsewhere as it frequently built in to recession probability models. Our global bond markets are also chiming loudly with the signal. 30-year U.S. Treasury yields fell below 2% for the first time ever overnight, and also below the 3-month bill rate, now tallying with 3-month-old inversion to curve between 3 months and 10 years. German bond yields continue to plumb record depths below zero. The latest trough set at 0.63. The alarming expansion of the sub-zero bond yield universe has also reached 16 trillion for the first time. Even yield curves in countries such as the UK, facing its own domestic economic crunch from a no-deal Brexit, inverted on Wednesday between 2 years and 10 years. The net result was one of the worst days of the year for the U.S. and global stock markets. Wall Street indices fell almost 3%. The all-country index of world stocks dropped more than 2% to its lowest level since early June. Only the second time this year has done that, and fell to a further 0.2% on Thursday. Selling in Asia was more muted earlier, however, with Shanghai, Hong Kong, and Seoul benchmarks reversing earlier losses to post even higher. Even though Tokyo's Nikkei lost more than 1%, markets appear to stabilize somewhat on hopes President Trump will retreat further on trade after the plunge by stock markets and his futures markets priced in more than a 50% chance the Fed will cut interest rates by half a point in the next months. While Wednesday's market fight was partly triggered by the slide in Chinese and industrial production growth to its slowest in 17 years, the second quarter contraction of the German economy was grasped straws today, pointing to a rise in Chinese house prices during the month. But real economic tests later in the Super Thursday of the U.S. data release, retail sales and industrial production for last month are due, plus the Philly Fed's economic activity and HB housing index for August. Currency markets were quieter. The dollars index held firm. Safe haven yen retreated, and dollar yen recaptured 106. Yen holds gains and traders seek safety as Treasury market sounds recession alarm. The yen held gains against major currencies on Thursday as sliding Treasury yields fanned fears of a severe global economic downturn and drove investors into safe haven assets. The latest turbulence in financial markets were triggered by an inversion in the U.S. Treasury yield curve over 2 years for the first time in 12 years. which helped lift gold prices and drove a massive sell-off in U.S. stocks and oil. The inversion, where two-year yields trade higher than 10-year yields, was historically preceded previous economic recessions. Underscoring the worrying signs, 10-year Treasury yields slumped to the lowest in 3 years in Asia trade, while 30-year Treasury yields broke 2%, which took the entire yield curve below the floor for the Federal Reserve's policy rate. Sentiment was already fragile after economic data from China and Germany revealed the extent of the damage the U.S.-China trade war is causing to two of the world's largest exporters. In this dim economic environment, analysts expect safe haven currencies, gold and bonds, and other low-risk assets to continue to get a boost. When volatility rises, dollar-yen becomes strongly correlated with Treasury yields, so the currency pair has room to fall, said Junichi Ishikawa. I expect other safe havens to rise. The mood is downbeat because of the trade war and bad economic data. The dollar is still changed at 105.90 yen. Bonds remain well bid in Asian trade. 10-year yields skidded to the lowest in September of 2016, and 30-year yields extended their rapid decline, plunging to an all-time low of 1.9649. And you can see here the euro is still trying to push up a little bit high from these areas here. And the bullion right now is at 77.72. I'd like to sell a rally towards that 77.80. See if we can, but certainly that opens the door for this to move higher. If we can get this to pair back to around 1145-ish, I think I'm going to be happy. It won't take a long now. This is the EOS area that we talked about. Remember, the 1135 is our stretch, and it was just a matter of will these boons push even further lower. Since they're kind of holding here, if boons do eventually retract back, but then we could see a pretty good rally here in the euro. So let's go and pull up the bias chart. So this is going to move down to 1135. That was our stretch from yesterday. Upside is going to be right there, 1192. You can see the cable just hanging on to these lows here. No changes in cable. We've seen how this 2094 has held this thing like a rock. And on the downside, got here 2030 for right now. We had a dip below actually 20 at one point, so this will stay here. Then we'll keep it. We'll update this to 2030. If it falls, it falls. Had this 1989, but we'll go with. And by the way it's holding, we'll go with 2030. And still keep the 2094. And let's move into the Aussie dollar. Well, we're holding this daily hammer that we had in place. Let's take a look here with the Aussie dollar. We had data come out. We didn't get much of a bounce off of that data. I mean, I thought we would have gone and punched up here towards the 68.20. So no changes in the Aussie. We're going to keep it within the ranges here. which is going to be 67.28, 68.16. No changes in the Aussie. Let's go move into the Kiwi. Same thing here. Going to keep it steady here at 64.25 on the Kiwi. Upside 64.97. That might be a bit of a stretch here. We'll push this down to 64.86. And with that, we'll move into the dollar CAD. I was a bit surprised. I mean, we did punch up in higher here. The dollar index is doing better, but I was a bit surprised we were able to really punch back up into this upper area. I thought we might have to do a little bit further work down here. I mean, our bias chart we had here on the upside with 32.78. So it's not like we went overboard, but I'm a bit surprised we were able to continue to make this push higher. And we did close on the 2-hour chart above 32.95. Still a bit of a surprise here. We've got a level here coming. Let's take a look here on the 2-hour chart. $33.36. We'll go at $33.36. We've already paired back here. It's actually going to be right there. 33.30. 33.30. And here'd be 32.54. And let's take a look at the dollar peso. Okay, now we got the, let me move into something real quickly. Okay, here's the one here, right there. And I'm going to sell it right here. I'll sell it right there. Right there, here at 80. You get that? Go with me. That may allow this boom, but we're looked on here. Remember what I saw right here? As long as we don't get above 85, right here, that's going to be key. And I'm short 79. 79. Oh, got it. Let's go on and move back into the main page. Actually, not filled. Hang on a minute. Okay, anyway, I'm going to be selling it when I take it market right now. Okay, and so let's go and move in now. Bear with me. I'd like to see this euro slide back into about the 45-ish area here. And I think that as long as we don't close above, as long as we don't get a close above on the boons above 85, then that may finally get a little bit of a reprieve, and that may allow this euro. Or if you can be, if you want to be on the safe side, you can wait till once we get past retail sales data this morning. But I like the euro on a buy, as long as we keep this boon from rallying too high. Um, anyway, let's move on to the dollar peso. We saw a pretty good strong move back up in here. Resistance. It's going to be right there, 1965.8. And support. It's going to be 1954.6. It's going to keep it pretty tight. Let's drop this. 1954.05. 1954.05. Okay, 1954. Let's go move on to dollar yen. Look how quickly this gave up those gains. And it came in right there. I didn't even know when it even hit that. Before I woke up. And we talked about this yesterday. I think I was on the daily roundup, I think. And I said, God, at least they would have taken out this area just by a little bit. And I think I might have mentioned 106.80, but it didn't quite make it to 106.80. But doggone. Although I wouldn't even have thought to, as weak as this thing, I wouldn't have thought to put a limit there. But even then, I probably would put the limit to 79 or 82, which still wouldn't have got filled. But it is what it is anyway. Mock snakes makes no difference. Hang on. So downside's going to be right there. 585 on the downside. Let's go move into the cash dollar index. Well, we did close to get up above this key 97.89 area that we've talked about. That was initially resistance. From 2 days ago, we actually pushed it up to 93. Let's go and take a look at here on the 2-hour chart. See that? Touches right there. That's what I was running against. 98.03. Support will be right there at 97.69. Let's go and move into the cross rates. We're actually getting ready to see the UK retail sales. So let's jump into the cross rates. Here's the UK data. Take a look here at the guppy. Sterling versus yard. And cable. Okay, Reuters poll is going to be down 0.2. The prior was 1% gain. Retail sales ex fuel minus 0.2 also. Year over year, positive 2.6 compared to 3.8 prior. Let's see what we do here. Got the guppy here. See what kind of move we get. In the remember in the cable, our bias chart resistance is 2094. Let's see what we do here. $15. Oh, I just got it. 0.2. Actually, better gain. Look at that. They expected -2, and they came in positive 0.2. Not much of a reaction here in cable. We have 2084, not too far off from our buy chart resistance, which is 2094. Look, considering the surprise, a bit of a muted reaction. But watch that, as I mentioned, 2094 is our buy chart resistance that remains at here on cable. 2094 still remains there. Like I said, considering the surprise, not very much of a reaction. Let's go and move into the QEN. Coming right there at 68.85. We almost made it there. Can you make it up to 68.87? Support, we have dipped down there. I mentioned 68.28. We've actually worked lower here, so support coming in right there, 68.12. Let's go into Euro Yen. We did have 1930 right here. We're going to keep the 1930. The only difference is that on the downside, right there, 1813. I'm going to the Euro one. We'll keep this at 65.44. And the downside, we had 64.63. Obviously, it came down here in this area right there, which is 64.30. Get rid of this. And let's go into the Euro Kiwi. If we get things turned around here in the Euro, I still want to keep this up in here at 73. I guess it's 73.89. And on the downside, We have taken that dip, but for today, well, it came in right there. That's what it was been here. I don't expect it just to move too much lower from here. So we're going to go to 72.67. And moving into the Aussie. We came into the 72.39 and we faded back. I mean, we took it out by a little bit, by about 11 pips, and then faded back. So that 72.39 is still going to stay in place. And on the downside, just working it just a hair bit lower right there, which is going to be 71.60. So 71.61. And let's take a look here. And on the guppy, going to keep this right here. 28.70, got there. Actually, it should be like, yeah, 28.70. And on the downside, we're going to keep the same downside right there, which is the 27.88. The last one's going to be the sterling on. Obviously, everything's pretty quiet right now. I mean, it's August trading, so not always going to see very much big movements. But on the downside, it's going to remain the same here. 77.68, 78.82. We're going to move back into the main page. And you can see the euros come back in here. Right in here to this 1145. The boom popped up right to that 84, and now we're back at 80. So right here, dollar index just kind of hanging on. If you want to wait, because if we do see a big move, we'll see that move. Can't wait till you see the retail sales data, and then if we get that move and we get the boons pairing back, then we can really start to make a move back up here. And that move should be able to take us at least into the mid 70s, if not the mid 80s. Potentially, obviously, we saw a bigger pullback. We see a more extended move. But quiet day trading, this is what we have here. Dollar yen quickly gave up the gains that it had. Has already gotten weaker. Well, that's what we have today on a very quiet August trading day. Thanks for joining us here at the European Crossover webinar.